Chinese e-commerce giant Alibaba recently reported their earnings for the quarter ending March 31st, 2023, as well as their results for the full fiscal 2023 year. Alibaba continues to be easily one of the most controversial and most talked about stocks in the entire market. On one side of the argument, you have people who will label Chinese stocks in general as, quote, uninvestable given the geopolitical risks, and then you have people who are more bullish on Alibaba who really believe that they're scooping up shares in a very profitable and very undervalued e-commerce giant. Alibaba stock remains down about 70% from its 2020 highs, and although the business has reported much slower revenue growth recently than they've had in years gone by, they do continue to report increasingly profitable quarters. This video is going to be a comprehensive overview of Alibaba's latest quarter, as well as where they landed for the full 2023 fiscal year. So sit back and relax, and if you haven't subscribed to the channel already, please be sure to do so. There's quite a lot to get through in this video. I want to start out with comments from the CEO, Daniel Zhang, as well as comments from the CFO, Toby Zhu. We'll also go through some of the high-level financial results, looking at revenue, earnings, free cash flow, balance sheet health, an update on share repurchases, as well as a spin-off that Alibaba actually announced this quarter as well. We'll go through the performance of the individual business segments at Alibaba, so looking at their Chinese e-commerce business versus the international commerce business versus the cloud business and so on. And Alibaba always host about an hour and a half long conference call alongside their quarterly earnings, a lot of which is really just a Q&A session between management and analysts that follow the company. So I'll also take you through some of my highlights from that Q&A session towards the end of the video. Now, firstly, just a little bit of context around the numbers that Alibaba reported this quarter. The past several quarters have really been quite impacted by some of the harsh COVID restrictions that have been happening in China that have really dampened basically consumption and consumer spending, which Alibaba is obviously very exposed to given they run giant e-commerce businesses. In the last quarterly update out of Alibaba, management suggested that kind of things started to normalize in sort of early February. And this quarter covers results from the 1st of January 2023 to the end of March 2023. So it's going to be a bit of a mixed quarter in terms of the first half of the quarter still having some of the COVID restrictions in place, and the back half of the quarter being a little more back to normal. And like I mentioned towards the start of the video, last quarter there was this sort of ongoing theme of very slow revenue growth, much slower than Alibaba had grown their revenue in the past, but significantly improved profitability and cash flow. So last quarter, Alibaba reported revenue growth of 2% year over year, adjusted EBITDA, which is the main sort of profitability measure that Alibaba uses, was up 16%, and free cash flow was up about 15%. And it's also worth adding that this is the first batch of quarterly results Alibaba has reported since announcing quite major plans to break the business up into 6 different operating units, each of which can eventually seek their own external funding and potentially future IPOs. And a bit of a spoiler if you haven't seen the news already, in this quarter Alibaba did actually announce a couple of plans around the first businesses that they do want to spin off, and also some timelines around that happening. Okay, so first off, let's go through a few of the things that the CEO of the Alibaba Group, Daniel Zhang, had to say in his opening remarks. And he kind of came out right at the start and basically covered the operating environment that Alibaba is currently kind of working through. He said, as COVID-19 cases waned after the Chinese New Year, business and social activities gradually recovered in China. This change had impacted some of our businesses in various degrees. Looking at the macro environment in China and globally, we see both challenges and opportunities amid uncertainties for an economic recovery. We will continue to execute our 3 core strategies in consumption, cloud computing, and globalization in response to these opportunities. And Daniel Zhang, the CEO, did sort of note that there had been improvements in consumption and consumer spending, but he did say that it really needs, quote, more momentum. But he also noted that there are sort of increasing levels of competition for that consumer spend. And on that, he said, we will focus on the following areas in such a competitive market. Number 1, acquisition and retention of high quality users. Number 2, maintaining our platform differentiation differentiated consumer mindset, and number 3, most importantly, creation of new demand through supply-side innovations. And finally, touching on the restructure announcement that Alibaba put out not too long ago, he gave a bit of an update on their very first spin-off. So he reminded everyone that Alibaba are transitioning into a holding company focused on capital management, and he said each business group will operate with a high degree of independence, led by its own CEO, who will assume full responsibility for company performance under the supervision by its own board. And the big announcement here was we plan to fully spin off Cloud Intelligence Group and complete its public listing in the next 12 months as an independent company. Additionally, he said our board have approved Freshippo's plan to kick off the IPO process. The CFO later noted that it's probably going to be a 6 to 12 month sort of process, and Cainiao to explore an IPO in the next 12 to 18 months. Thirdly, Alibaba International Digital Commerce Group will explore raising external capital to support the business's expansion in the global market. At this point, Daniel Zhang handed things over to Toby Xu, who is the Chief Financial Officer of Alibaba, to give a bit more detail on the mechanics of how the cloud business spin-off is likely to work, as well as how the Alibaba Group, which will still be in existence and will still be overseen as CEO by Daniel Zhang, kind of how they will think about allocating capital now, given that they're going to have some changes in ownership potentially in the different subsidiaries that they now currently own all of. So Toby Xu basically said they are setting up a capital allocation committee at the Alibaba Group level, which will have 3 main priorities. So first, the strength of our balance sheet and our cash position is a competitive advantage in an uncertain environment. While we maintain a prudent approach to our capital structure, we will be focused on improving return on invested capital and managing the assets of the company. Second, we will design, review, and implement earnings per share accretive activities, including constant share buybacks to reduce our outstanding share count, while maintaining discipline in managing our employee stock option programs. Third, we will explore all options to enhance shareholders' return by achieving more transparency in the value of our assets and the returning capital to shareholders, including subsidiary fundraising, IPOs, and spin-offs. Going forward, our main source of funds will be from Taobao and Tmall Business Group, which will continue to be our core holding and 100% owned. The Taobao and Tmall Business Group generates substantial annual free cash flow, which will be made available to the Alibaba Group. In fiscal year 2023, we generated $25 billion in free cash flow that was mainly contributed by these businesses. And lastly, on the cloud spin-off, they said, as announced, our board of directors approved a full spin-off of the Cloud Intelligence Group via a stock dividend distribution to our shareholders. So quite a few changes afoot at Alibaba with how they're structuring the group, potentially breaking it up into 6 different units, and we're starting to see the beginning of that sort of materialize for shareholders with the cloud business IPO and also potential IPO plans for Cainiao and Freshippo. And I would think that we will see kind of more and more of these IPO plans and some of the finer details continue to come out through the year. Now, in terms of some of the overall financial results that Alibaba reported for the quarter, let's run through a few of those numbers. So in the March quarter, Alibaba reported revenue growth of 2% year over year. They reported income from operations of minus 9% year over year. Now, I will say there's a lot of noise in that income from operations number, to the point where I actually don't think it is meaningful at all in any real way. Last quarter, that number was quite heavily impacted by a goodwill sort of impairment that Alibaba had to make on their balance sheet. And this quarter, it was quite heavily impacted by the reversal of a stock-based compensation expense around Ant Group or Ant Financial. So for that reason, I'm going to focus on a couple of other sort of profitability measures that aren't impacted by those sort of one-off adjustments. One of those is the adjusted EBITDA, which was up 60% in the quarter. That was largely driven by sort of margin expansion. So we had a pretty well flat revenue, only 2% growth, but significantly higher profitability and cash flows. So the EBITDA margin that they reported for the quarter was 12%. That's up a lot from only 8% for the same quarter last year. So sort of a 50% gain going from 8 to 12. Non-GAAP net income attributable to ordinary shareholders was up 30%, and on a per share basis, it was up 35% given the reduction in shares outstanding from the repurchases Alibaba have been doing. And in terms of their full fiscal 2023 results, which will include a couple of fully sort of COVID affected quarters here, they reported revenue growth of 2% for the year and non-GAAP earnings per share growth of 4%. Now, each quarter, I always find it quite interesting to run through different components of Alibaba's cost structure. Now, they've mentioned for the past 2 quarters, for example, that they're seeing heightened competition in the e-commerce space. So it's quite interesting just to go through the different elements of how Alibaba go from earning $1 of revenue to earning, X number of cents in profitability, what costs are kind of coming out in the middle there, and it's where we can potentially see any red flags. For example, if Alibaba were having to compete very heavily on price and provide a lot of discounts in order to maintain their market share, it's here where we would probably see some real deterioration. But looking through each of the different expenses that Alibaba lay out here, it was really positive news across the board. So cost of revenue in the quarter was down from 68% to 66%, which is fantastic. I think that's where we'd see a lot of that discounting type activity show up. Sales and marketing costs as a percentage of revenue went from 13% down to 12%. Product development was down from 6% to 5%, and general and administrative was flat at about 5% of revenue. So across the board there, pretty much every major cost as a percentage of revenue was either flat or down. Again, great news for margins, and we're seeing that start to flow through to greater cash flows in the business. And speaking of cash flows, let's get into some of those latest numbers now, because I think these figures really get to the heart of how much, obviously, cash flow Alibaba's business is generating. There's a lot of weird adjustments that can show up in some of the profitability measures Alibaba use, but at the end of the day, if we're seeing the business throw off a bunch of free cash flow, that is a very healthy and very good thing. So operating cash flow for the quarter was 31.4 billion RMB. That's about $4.57 billion US dollars. That is versus a loss of 7 billion RMB in the same quarter last year. Free cash flow in the quarter was 32.27 billion RMB, or about 4.7 billion US dollars, again versus a loss of 15 billion RMB in the same quarter last year. Now, Alibaba is a somewhat seasonal business. Their cash flows do change quite dramatically depending on which quarter we're looking at. So although the free cash flow of 4.7 billion US dollars is certainly no absolute record, it's not Alibaba's best quarter ever or anything, it is in fact the best fiscal fourth quarter that I can see throughout their history. It's significantly better than last year where they had negative cash flows. Now, in terms of how they're starting to use some of that cash flow, in the quarter they put 1.83 billion US dollars into the repurchase of about 21.5 million of their ADSs. That's a slower rate of share repurchases than we saw last quarter, but it does give us a couple of details we can kind of work out. So it tells us that they probably paid an average price of about $88 per share or per ADR for their repurchases. And Alibaba, like I often say, does issue stock as part of their compensation programs. So the buybacks are pulling the share count down, but the compensation programs are sort of fighting against that and pushing it back up a little. But overall, the shares outstanding was down about 0.14% in the quarter by my calculations, and year over year the share count is down about 2.4%. And after all of those share repurchases, Alibaba currently still has 58.1 billion US dollars of net cash on their balance sheet. So that's cash over and above any long-term debt and so on that they have. $58.1 billion is about 27% of the entire market cap of the business today, so pretty crazy chunk of Alibaba's valuation is just cash at this point. And in terms of the buyback program longer term, they still have 19.4 billion US dollars remaining under the current buyback authorization, which lasts through to March 2025. And just briefly on valuation for Alibaba, for the past 12 months, for the full 2023 fiscal year, Alibaba reported free cash flow of 172 billion RMB. That converts across to about 25 billion US dollars of free cash flow. Now, Alibaba does do quite a bit of stock-based compensation, as I've already mentioned in the video. So if you reduce the free cash flow amounts by how much they paid out in stock-based compensation, which is about 30.8 billion RMB, you're still left with free cash flow for the full year of about $20.1 billion. Now, on the current market cap of Alibaba, that's about a 9.2% free cash flow yield. And if you adjust for the net cash that Alibaba has on its balance sheet and do that free cash flow yield on more of an enterprise value type basis, I get to about a 12.9% free cash flow yield, which if you flip that the other way around into sort of a free cash flow multiple, that gets me EV to free cash flow less the stock-based compensation of about 7.8 times. So you can kind of see why a lot of people do think that Alibaba stock is undervalued. Of course, there are risks with investing in any company, not just Alibaba. That free cash flow may go up, it may go down, it may go sideways for a long time. There's other external risks that could kind of ruin the investment and that type of thing. But just looking at it through that lens, there's no denying that Alibaba generates a lot of cash relative to the price that it's currently trading at in the market. I want to move now to the individual segment results in the quarter for Alibaba, kind of working through largest to smallest or most significant business units to least significant, essentially. And we'll check in on how some of these different business units have been tracking. Now, the biggest one by far and away is the China commerce business. So in the last quarter, that represented 65% of revenue, and get this, it was 152% of adjusted EBITDA, which is sort of the profitability proxy Alibaba tend to use. On a full year basis, it was closer to 125% of sort of whole Alibaba Group EBITDA. But essentially, the China commerce business in a lot of ways is subsidizing Alibaba's loss-making businesses. And it's a huge chunk of the Alibaba pie. It includes brands like Taobao, Tmall, Freshippo, Alibaba Health, Taobao Deals, and a whole lot more. And for the quarter, revenue came in down 3% versus the same quarter last year. Adjusted EBITDA was up 19%. EBITDA margins were up from 23% to 28% this year. They said that was driven by significant loss reductions in Taobao Deals, Taobao and Freshippo. So again, the big China commerce kind of chunk of the business continues to have a very modest growth. It even shrunk 3% this quarter versus the same quarter last year, but significantly improved profitability. Moving into some of the smaller components of Alibaba now, let's talk about international commerce. That represented 9% of revenue in the recent quarter, and it's currently a loss-making component of Alibaba. It includes brands like Lazada, AliExpress, actually Alibaba.com, their sort of international wholesale business, and Trendyol, which is a Turkish e-commerce business. Now, good news on this front, it's growing a lot faster than the China commerce business. Revenue came in up 29% year over year, almost all of that growth coming from the retail segment of international commerce. Retail was up 41% in the quarter. And it is still loss-making, but it's becoming less loss-making on a sort of EBITDA margin basis. So EBITDA margin was minus 13% versus minus 18% in the same quarter last year. They said that gain came mainly from reduced losses in Trendyol, partly offset by higher losses in Lazada. And they said that negative 13, even though it's an improvement, it actually looks a lot lower than it would otherwise. There was a one-off termination expense on some service contracts that Alibaba are involved with. They said that one-off hit should allow them to lower their operating costs moving forward. And if you were to sort of back out that one-off cost, the margin would have been more like negative 8% rather than negative 13. So overall, international commerce is one of the faster growing components of Alibaba, and they're running the pretty standard kind of Alibaba playbook. They're scaling it very fast. Pretty heavy focus on just revenue growth up front, and the profitability kind of comes on the back end as they reach scale and cut out any unnecessary costs that might build up through their initial growth. Next up, we've got local consumer services. This represented about 6% of revenue in the quarter, and it's currently very loss-making. Terrible margins in this component of Alibaba's business. It includes two main products. One is Ultima, which is sort of like a Chinese Uber Eats, I suppose. And it's also got AMAP, which is sort of mapping navigation software. As I understand it, it's a little like a Chinese Google Maps-esque type product, but it also gets sold directly to auto manufacturers, so it will come kind of inbuilt in Chinese produced vehicles. Revenue in that segment was up 17%. They said it's mostly from Ultima growth, both number of orders and average order value was up in the quarter. EBITDA margin was a terrible negative 33%, but that is an improvement from an even more terrible negative 52% in the same quarter last year. Again, they said it's mainly from loss reductions in the Ultima business, which because of the increased number of orders and the increased order value continues to have sort of better unit economics. Next up, let's talk about Cainiao, which is Alibaba's both domestic and international logistics business. It represented 7% of revenue in the quarter, and it's really just getting to sort of a break-even kind of point in its business life. Now, the reporting for Cainiao is after what they call inter-segment elimination. That's essentially sometimes Alibaba is sort of a customer of itself, I suppose. Alibaba uses Cainiao for its logistics and so on. So these numbers are reported after that kind of cross-pollination, I guess, within the business. After inter-segment elimination, as they call it. So revenue for Cainiao was up 18%. They said that was primarily from higher revenue per order in their international fulfillment services and increasing demand for what they call customer logistics. And interestingly, they did note that now 72% of the revenue for Cainiao comes from external customers, so non-sort of Alibaba businesses, which is really nice to see. EBITDA margin, like I said, they're just getting to about break even, so margins were negative 2%, up from negative 8% in the same quarter last year. Cloud, of course, the business that is about to be spun off. This includes two main products, so Alibaba Cloud, as you might expect, but also DingTalk, which is sort of a Chinese equivalent of something like Slack. And although Alibaba Cloud has been sort of steadily losing market share to some of their competitors, which I'll touch on a little bit later, they still are the leader in China with ballpark 30% market share in cloud services. And cloud represented 9% of revenue in the last quarter. So it was previously one of the really fast growing segments of Alibaba. It really has disappointed a lot of investors over the past several quarters, and unfortunately that kind of continued this quarter with again basically no growth out of the cloud segment. So revenue was down 2% versus the same quarter last year. Margins were a little better, so EBITDA margins came in at 2% versus 1% in the same quarter last year. And for the full year for the cloud business, revenue was up 4%, EBITDA margins were 2%. So it seems like the 50% a year kind of growth days are probably gone for Alibaba Cloud, unless these are just some short-term hiccups or something. So a little bit disappointing to see, but those are where the numbers stand for the cloud segment. Okay, so two more segments to go here for Alibaba, and we're getting into really small components of the business now. So we have digital media and entertainment, which is about 4% of revenue, currently loss-making. It includes Alibaba Pictures and also Youku, which is again like a Chinese version of YouTube is how I understand it. Revenue was up 3%. EBITDA margin was again a loss, but a narrowed loss. So it went from negative 25% last year to negative 13% in the latest quarter. And finally, innovations and other initiatives. This is kind of similar to Google's other bets type category, where I think they just lump a bunch of random stuff. It's only 0.3% of revenue, so it's effectively meaningless to Alibaba's overall financial results. But revenue was up 47%, and EBITDA margins, this is not a mistake here, were negative 325%. So, that's a large percentage, but the numbers we're talking here are very, very small relative to Alibaba's overall operation. So in terms of the segment results at Alibaba, really a continuation of what we've seen over the last several quarters now. Very little to basically no growth, even a slight reduction in revenue in the big China commerce kind of segment. Some of the smaller segments though, like international commerce, are growing really quickly, and we saw an increase in margins across every single segment of Alibaba's business, which was very cool to see, and we're clearly starting to see those kind of efficiency gains and cost reductions turn up in the cash that Alibaba throws off. Now, this is usually the point when going through the Alibaba results that I would jump straight to the Q&A between management and analysts, and I will cover that later in the video here, but it was a little bit different this quarter because for the first time we actually heard from some of the new Alibaba CEOs. That is the CEOs of the 6 individual business units that Alibaba will presumably, spin off at some point in the future. The exact timelines around each of these groups will obviously be different, but they each now have their own CEO and their own board of directors, and we heard from a couple of them on the call before it got into the kind of Q&A section. So first up was Trudy Dai. Now Trudy Dai is the CEO of the Taobao and Tmall group, and she kind of shared a few thoughts. So she said they had positive momentum in China's economy. GDP recently came out as 4.5% growth year over year, and a moderate recovery in consumption, which again is kind of the key segment that Alibaba is exposed to. She says that the group achieved year-on-year growth in users and gross merchandise volume on the Taobao app, but she also warned of kind of increasing competition in the consumption space. She said, nonetheless, many new opportunities are being created by growing consumer demand for more diversified offerings and also by technological advances. She sort of explained 3 strategies to advance and grow their market position, despite the competition that's emerging. She said create richer and more differentiated content and to introduce new interactive entertainment scenarios while accelerating growth in user scale and user time spent and consolidating its position as China's most widely used online marketplace. Number 2, build a prosperous ecosystem by making the supply side more open and inclusive. And number 3, upgrade existing merchant tools and create new tools for merchants. She closed by saying, so in summary, our strategy is putting users first, building a prosperous ecosystem and realizing technology-driven innovation. And our core goal is for Taobao to continue to be the number 1 consumption platform, serving the largest number of users while upgrading the platform to serve a broader range of needs. We heard very briefly from Zhang Fan, who is the CEO of Alibaba's International Digital Commerce Group. He said this quarter, the international commerce segment has shown rapid growth momentum. AliExpress officially launched a new service called Choice. It's based on the fulfillment by AliExpress model, and it provides customers with value for money, product choices, and better services, further enhancing the consumer experience. He did speak a little bit on the situation in Turkey. Now, Alibaba has a business called Trendyol, which is kind of one of the faster growing e-commerce platforms. It's a Turkish business, and Turkey, unfortunately, has experienced some pretty severe earthquakes over the past few months. He said the Turkey business was affected in the short term by the earthquake, but recovered quickly and achieved growth of 27%. And finally, Daniel Zhang, who of course is the chairman of Alibaba, but is also now the head of the sort of cloud segment at Alibaba, explained a little bit about the 2% decline in revenue. He said, it's partially due to our proactive move to adjust our revenue structure and focus on higher quality growth. It's also a result of external changes in the market environment and customer composition, and explained those external factors also include the impact from a top customer switching to self-built infrastructure for its international business. Those revenue contributions to Alibaba Cloud decreased 41% year over year. Now, they never actually say the name of that top customer on these conference calls, but it's fairly broadly accepted at this point that it's ByteDance, the parent company of TikTok. They have steadily been moving away from Alibaba Cloud, and they were previously an enormous customer. So that has definitely pulled down the growth rates on the cloud business. He did, however, say that if you sort of zoom out 14 years, which is the period of time in which Alibaba has had a cloud business, that we got to where we are today because AliCloud sees two historical opportunities. Number one, rapid development of China's mobile internet, and number two, digital transformation of traditional industries. Today, the age of AI brings two new historic opportunities to AliCloud. Firstly, the emergence and the broader application of artificial intelligence, and the second opportunity lies in building models as a service. They gave an example of that actually where Alibaba have launched a basically competitor to ChatGPT. I won't attempt to pronounce the name of it here, but I will put that up on the screen so you can see. Those are the types of models, I guess ChatGPT and the Alibaba clone sort of thing here as a language model. Those are some of the AI initiatives that Daniel Zhang's getting at here. Okay, so following those remarks from some of the business unit CEOs, we did get to the Q&A session with the analysts. So I won't go through every question here because there was a lot covered, but I will go through some of the questions and answers that kind of jumped out to me. The first one was with the reorganization of the Alibaba group. Basically, Taobao and Tmall may no longer have to have their profits kind of funneled into keeping some of the loss-making business units at Alibaba alive. We've already talked about how China commerce represents more than 100% of profits. So they basically said, what does the reinvestment roadmap kind of look like for the Taobao Tmall group moving forward? Trudy Dai, the CEO of that unit, said, we always believe we should start with the end goal in mind, and therefore in making any investments, we always look at what the end objective is and planning that out. So in the next 3 to 5 years on Taobao, we'll have a very clear focus on putting users first, on building up a prosperous ecosystem, and we'll continue to grow the scale of the business, driving it, as I said, with technological innovation and progress. Next up, there were quite a few questions around the cloud business. Alibaba Cloud has recently done a range of price reductions, so there were some kind of queries around that, as well as sort of the long-term vision for where Alibaba Cloud could get to. So Daniel Zhang, the CEO of that business unit, said, in terms of the price strategy, I think a major objective behind that strategy has been our desire to make computing power more accessible, including to small and medium-sized companies as well as to developers. And this is a business where we can achieve strong economies of scale. So as the leader in the market, it's possible for us to leverage that economy of scale to pass the dividend of our technological advantage onto customers. There are indeed some different players entering the market, but Alibaba Cloud is very focused on public cloud. The proportion of the public cloud takes up within our revenues is significantly higher than that of our various competitors, and we've made a lot of effort to grow higher quality revenue from our core products in IaaS and SaaS, and again leveraging our economies of scale that we've achieved to pass on those dividends to benefit our customers. There was a question on the cloud spinoff essentially asking, will all of the equity be returned to shareholders via a dividend, or will Alibaba Group retain control, and kind of how will they decide how much equity they keep in future spinoffs? Toby Zhu, the Chief Financial Officer, said, essentially your understanding is correct. We're talking about a full spinoff. They also said the cloud business is relatively independent and different in terms of its characteristics versus those of the consumer-facing business. So that's the reason why the decision was made to do a full spinoff. On the second part of that question around how much equity Alibaba will keep in their various units over time, Daniel Zhang jumped in here and said, I think the clearest answer to your question is that it comes down to our three core strategies, namely consumption, cloud, and globalization. And when we talk about globalization, that is our digital commerce, logistics, and cloud. And I think that really is the clearest possible expression of which of the businesses we consider to be strategic. And this one really jumped out to me in terms of the long-term runway for Alibaba Cloud. He said both businesses that can do better on an individual basis rather than a standalone basis should be encouraged to independently face the market. And we would love nothing more than to see one of these little Alibabas spinning off from Alibaba become another big Alibaba, as big as the group company is right now. So going forward, we would be happy to see, and indeed would expect to see, Alibaba Cloud as an independent company growing to be as big as, and perhaps even bigger than, the Alibaba Group is today. And last question I'll cover here is kind of just in terms of market recovery in the China commerce business. So The question was basically around GMV growth and future profitability plans internationally as well. So Trudy Dai on Taobao and Tmall said, regarding your question on Taobao and Tmall, yes, definitely. We've been seeing pretty good numbers, good results in March and April, especially in terms of growth in users and growth in orders. And on the international arm, Zhang Fan said, in markets where we see strong potential, we will be investing to develop the business, while at the same time, in respect of our existing or the more established businesses, we will be looking at ways to further enhance operating efficiencies. So we're looking at each market differently. So a huge amount covered in that video with the latest quarter and the kind of full year results out of Alibaba very recently, but some pretty consistent themes right across the business this quarter. Again, very modest revenue growth, but massively improved profitability and massively improved free cash flow generation as well. Like I said, even including those COVID affected quarters, full year free cash flow was about $25 billion US dollars, or about 20 billion after you back out the stock-based compensation. They've got a huge amount of net cash on the balance sheet. They continue to repurchase shares, although admittedly it was a bit slower this quarter than it has been in previous quarters. And we're really starting to see things warm up in terms of spinning off some of their business units. And now that Alibaba are hopefully right through some of these harsher COVID restrictions, we should get a look into our first sort of a little bit more normal quarter coming up in 3 months' time. So I hope you enjoyed the video. If you did and you haven't subscribed to the channel already, please be sure to do so, and let me know your thoughts on the latest results out of Alibaba down in the comments section below. But that's it from me for this one, and I'll see you on the next video. Cheers.